The topic of today's panel is Decentralized Finance, DeFi, institutional or not? It's gonna be a good topic. So why don't we introduce I'm Gordon Einstein, that's my short intro. Why don't we give our speakers a moment to introduce themselves, please?
My name is Davinci, Jeremie. I have a software company called Davinci Codes. I also, I'm a YouTuber. I'm known for, begging people to buy Bitcoin back in 2011. Also, I have a video that went viral that in 2013 saying, please buy Bitcoin for $1 worth of Bitcoin actually. And because I was trying to convince my subscribers to get into Bitcoin and they just didn't like it. They hated it with a passion. Actually, only 5 people did get into Bitcoin of my subscribers.
Yeah, sorry, don't you have a t-shirt that says, I told you so?
Yes, I do.
Yeah, that's nice.
Yes.
I'm Karthik, Iyer. I'm from the P2P Foundation. So if you search for Satoshi Nakamoto, the first link is the Wikipedia link, and if you click on it, Wikipedia will tell you the only place Satoshi published the Bitcoin
My
plan.
friend, you talk faster than I do.
We've got a talk there.
We got 40 minutes. Say that again a little bit slower.
Well, P2P Foundation, where Satoshi published the white paper. So one of the first human beings to mine crypto, one of the first human beings to trade crypto. And you've seen my trade from 2011. Coin market cap did a story on me on the 10th anniversary of Bitcoin. I mean, there were 30% of the speakers here on this thing. There are people whom I met very early on, like Luke, for example, 2014, 2013, all the OGs. So I run a company called Blockchainmonk, which is one of the oldest companies in the space. I have a fund which is called Genesis Block. It's a VC fund. 100 keynotes, I think it's probably after 100 plus, whatever. But very excited to be here in Dubai. I think Dubai represents a great vision for what it takes to be a city, and I think blockchain represents that, right? I mean, it's a vision of humanity to take us all into the future. So very excited to be here. Very excited to be part of this panel.
Alex, tell us about you real fast.
Very good to be here with you guys. Thank you very much for all the people in the audience. My name is Alex Nascimento. I teach blockchain business applications and security tokens at UCLA in Los Angeles and run a 7cc Blockchain Investments, which is an investment firm focused on institutional adoption of blockchain and cryptocurrency. So very happy to be here. We've seen a great massive adoption from institutional players, which makes us very happy. So happy to be on this panel with you guys.
Fantastic. So let's start just at Decentralized Finance 101 before we get into the question of whether or not it's subject to institutionalization. If you had to give a succinct, explain it to me like a 5 years old definition, what is DeFi?
Well, DeFi allows you to do complex transactions like you do today on stock exchange, buy and sell stuff without actually having somebody tell us whether or not we qualify to buy something, buy an investment product. That's what a DeFi is all about. Being able to buy something without qualifying.
You want to give it a shot?
Well, let me put that in context, right? I mean, the world economy is $74 trillion, right? $7 trillion are rent-seeking intermediaries. You go to Singapore, you go to London, you go to New York, you see all these big banks, and we don't need these intermediaries. So DeFi is about bringing together, people who want to, move the assets around the world by doing it without any human beings, without any intermediaries. I mean, if you think about it, Bitcoin is the longest running bank in the world, zero downtime. It's been around since 2009. It's at zero downtime, zero human beings, trillions of dollars being transacted. And this is the future of finance. So, very exciting.
Alex, DeFi like I'm a 5-year-old.
Yeah, 5-year-olds, cool. So the way I look at DeFi is pretty simple, right? It's in the past you used to go to banks to get products, and you used to go to banks, and then that was potentially like one of the very few places where you could get interest. Now with the decentralization and the entrance of every single player in the universe into the space, you can get interest from different players around the block. So you have a massive competition now for providing interest on capital that it's allocated to those plays.
I'll give it a shot, though I don't know if it's be succinct somewhere. But the way I look at it is you have traditional or centralized finance. You have all these tools that provided some value over human history, whether it's bonds or interest-bearing accounts, or the safety, relative safety of banks. But traditional finance is inherently permissioned. By nature, it's permissioned. And to me, decentralized finance is porting over the functionality which has been associated with decentralized finance over to the blockchain and making it permissionless. And also building up new technologies on top of it that could not do on these traditional systems. Which leads into the next question of, assuming that our theses are correct, including the idea we're going from permission systems to permissionless systems, is DeFi subject to institutionalization? And relatedly, is it even subject to regulation? Because to me, the two go hand in hand. And maybe one with a shot.
Well, the reason why it's not subject to regulation is because, let's just pretend that when an institution wants to create a DeFi product, they have to provide the source code available for everyone to see. So someone could copy it, build it, and build something even better. And so they really can't create a regulatory environment because it's open for everyone. So, for example, it's not just open for everyone because money has been around for a long time, and we've only had a small number of types of money. And today, Bitcoin and cryptocurrencies have provided a new type of money that provides an additional feature that no one really thinks about. Is that for the first time ever, money does not have to belong to a person. It can belong to a thing. A computer system, right, or a car can own money and transact for you. Can actually use those DeFi products for you and make money for you. So this is a critical thing people have to understand. Now with permissionless finance, anything can actually use money and earn money for you.
That's an interesting distinction because when you said that, I was kind of raising an internal eyebrow because companies own money, they're not people, trading bots. But I think you're making a distinction that these things are not necessarily acting on the behest of anyone else. They really are autonomous.
Exactly.
And there's no one behind the curtain. They are robots acting on the network.
Exactly. So, the network doesn't know that you're a fridge.
No, on the internet, no one knows your dog. Yeah, I know. Please.
Well, you asked a very fundamental question, Gordon, and I think it's interesting to understand the fundamentals because Ronald Coase wrote the theory of the firm. So when you talk about institutions, right? And he says firms exist because they help increase economies of scale and reduce transaction costs. The reasons why firms exist is to get to massive economies of scale with very low transaction cost. So if you look at disintermediation and non-repudiation, the two foundational pillars of blockchain, you have this emerging new type of company which is called as a DAO, a decentralized autonomous organization, where pretty much all human activity and commerce will get into this new type of structure where everything will be a contract because all agreements between human beings are essentially boiled down into simple contracts. So now in the United States, in certain states, the DAO is officially recognized as a legal entity. So imagine all the things you could do, right? I mean, billions of dollars of assets moving around in smart contracts, trillions of dollars of trade being committed, no human beings, no physical institutions, no large fancy buildings, no suit, no tie. I'm not wearing my bow tie today because I was thinking about it. I usually wear a bow tie. So we live in very exciting times, I mean, the next 10 years is all about this thing, right? It's all about efficiencies. It's about
I'm going to bring it
scale.
back to my question. This is interesting, and we're going to pursue it, especially the DAO part. But is decentralized finance even the subject of regulatory oversight, or is there sort of an intellectual oxymoron there? Can you hit that? Is it peanut butter and chocolate and tastes better together, or is it oil and water and just never going to work?
Well, I think, as I said, the DAOs are being regulated right now because if you look at even the smart contracts, they're basically DAOs. They're DAOs that are running on the blockchain, and there are regulations coming to regulate them. For example, we saw Mark Cuban investing into, Iron Finance, and we had the first run of the bank on a DeFi smart contract. And Mark Cuban came out and said, I lost all my money, if I put it in a bank, I can go and sue the bank. Now, who do I sue, right? I mean, it's a contract. And I think this is the most important question that you asked. I think perhaps in the discussion, which is, how do you regulate this thing? Because if it's a DAO and it's open source, we don't know who the creator of the DAO is. How do you regulate it? And I think these are discussions that people will have, the SEC will have, IMF will have, OECD will have, because everything is moving towards it. We've had an 880% increase in the amount of assets locked into contracts. So there is no straight answer by question. It's still evolving, which is why it's very exciting to talk about these things.
It is. Alex, I'm going to combine two elements and throw it at you. If we take this thesis that was put out, that we're going to have we have, and are much more in the future, going to have non-human actors in the economy, not just AI operating on our behalf, but truly autonomous actors. And we take the second thesis that everything is going to be a contract. Can you regulate AIs engaging in contracts? I mean, who do you sue? How do you sue an AI? How do you sue a DAO? And if you can't sue them, you can't take action. How do you regulate it?
Yeah, no, that's a very interesting question. And, together with the university, we took an approach that for since 2017, it was we can't teach students securities fraud, right? So that was our thesis, institutionalization. And I used to go.
I want to make sure I heard that correctly, because I'm a securities lawyer. You can't teach students securities fraud?
Yeah, you can't do that.
You can't teach them how to do it, or you can't teach them how to stop it, or you just can't teach
Well,
it?
you can't promote it, right?
Well, it's probably not a good idea to promote securities fraud.
As an institution, as an academic education institution. So based on that point, let's go for a basic premise, right? The regulator will always be behind the innovator. Somebody has to innovate for the regulator to understand and create rules and legislations. The second point of what I think is going to happen is that you're going to have institutional players playing on the DeFi space, right? And where would you put your money if you're Mark Cuban? In a contract that you can't sue anyone, or in a contract with Citibank, or B of A, or any other major institution? So you're going to have an adoption greater through the institutionalization of DeFi than on the smart contracts.
I'm not going to interrupt you, and I'm going to throw an idea at you. I don't think it's so self-evident what you just said. I think you would take your risk-adjusted return into account. So if you're
a crypto guy, right?
Well, if you're anyone, if you can get 100% return at 50% risk on DeFi, or 0.01% interest that's insured, it's not so, especially if you're arbitraging or spreading your risk on different platforms, it's not so obvious to me that the Citibank is right into it.
Because you're a crypto guy, right? But let me ask.
I didn't come out of my mom's womb as a crypto guy.
Does your mom plays on the DeFi space?
Your uncle. I shouldn't have brought my mom into this.
Yeah.
But go on.
Let's talk about your uncle then. Does your uncle put his life savings on a DeFi contract?
No, but I think it's not exactly. I'm not exactly spring chicken anymore. So you're kind of going to pensioners when you say that. Yeah. But does my son? Yeah. And when he goes to college and beyond, and he's playing around with his Roth IRA in the U.S., will some of that be DeFi? Sure.
I know it will be, right? So then the last point I think is where does it stop, right? The bucket stops where the regulator will come and will put you in jail, regardless if you can sue anyone or not.
How do you put an AI in jail?
Well, you're not going to put the AI, right? But you're going to put the people who are operating behind the AI. So this whole idea that DeFi protocols are elusive in the cloud, we're not seeing that. Most of the DeFi protocols that are out there are have CEOs that are running it.
All right, so I'm going to push back on this idea just because I'm not a neutral moderator, but then I'll throw it open. Uniswap, take Uniswap for example. They're under investigation by the SEC. Now everyone freaks out when they hear that, but being under investigation by the SEC is sort of like a rite of passage these days. If you want to sign that you're not innovating, that's the SEC not investigating you. Okay, so to me, it's almost like a compliment. But they published V3. It's out there. I think it's open source. Of course, it's open source. It's pancake and sushi are taken. Suppose they said, okay, we're going to now sue you. We're going to put you all in jail. Does that stop Uniswap? Doesn't it just split and morph and continue on? I mean, how do you stop this thing now? Can you?
You can't, because it's already out there. It's already running, and in a decentralized format. There's no off switch for the Ethereum network or for the Uniswap contract. They can destroy the keys, right? Of course, they could actually, with the key, somebody with the key could probably delete it, but it doesn't matter. If they delete it, everybody has a copy of it anyways, so they could just re-upload it into the network, and it will start running again. So it's useless to stop that way. If they want to start saying anybody who creates a contract goes to jail, fine. People will just create contracts anonymously, and there's no stopping that. So I would love them to do that, actually, because then everybody would be anonymous, and only contracts that are, been tested, battle tested. You don't need to look at whether it's a good person or not. You look at whether the contract works, yes or no. Everybody says, Satoshi, I don't know who Satoshi is, right? He could be, Hitler. It doesn't matter. Does the math work? Yes. That's all that matters. That's all that matters. Don't worry about the person. Worry about, does the math work? Does the contract work? Is it fair? Is there any long-term consequences? That's all you need to look at.
Let's just all take a moment to remember that this is the conference where Satoshi was thought to be Hitler. Just etch that into your mind. Please go on.
No, I agree with like the math part, right? But we all remember here like what happened when Bitcoin was going to be considered a commodity or not. Let's think about if Bitcoin was considered not a commodity and was, by the SEC said, okay, you can transact Bitcoin. You wouldn't have Visa doing it, you wouldn't have PayPal doing it, you wouldn't have all these institutional players playing in it, you wouldn't have Bitcoin on the CME, and where would Bitcoin price be today?
Well, I think it's a more fundamental.
Not as much. But would it be zero?
I don't think zero, but certainly not, 57,000.
No. Oh, up to 57 this morning?
57, yeah. But Gordon,
Yesterday is 56. Oh,
57 something. But Gordon, when you think about it, right? When you think about these questions, who are you regulating? Are you regulating the technology? Because if you're regulating the technology, you have proof of work, reversible proof of work, which Hal Finney wrote back in 2004. I mean, he passed away. There's a statue of Hal Finney now in Hungary, claiming that he's the partner of Bitcoin because, if you look at Bitcoin, it's basically proof of work. It's a consensus algorithm, and he wrote the paper on reversible proof of work. Are you trying to regulate the guy or put the guy in jail who wrote SHA 256 because all the hashing is SHA 256? So every technology has about 50 different components, right? And there are 50 different scientists who are writing these things. What are you regulating? Are you regulating technology? I don't think SEC is in the business of regulating technology. You could regulate people who are providing liquidity and things like that. These are all decentralized people. You have ZK Snarks and Quarks, and now zero knowledge is getting into DeFi. So nobody would even find out. I mean, you need the power of God to basically understand what's going on here in this space. So, I mean, the pace of change is so exponential, Gordon. I mean, the design of the whole decentralization thing is based on the internet. It's based on, there's no single node, there's no single server. It's based on decentralized headless node design. It's like Ethernet, right? I mean, nobody can turn on the internet because there is no single internet server. There are millions of DNS servers. The same way there are millions of nodes mining crypto. So there's a more fundamental thing because there are three pillars in our society today, right? So 1,000 years ago, all human activity was created by kings, and then the British East India Company became the first company in the world to organize economic activity. The activity of colonization was given to the British East India Company. It became the first private enterprise. It became so efficient, right? Now we have this third pillar, which I call the third pillar. Which I call it the third pillar, right? The first pillar being the kings, second pillar being private institutions, and the third pillar being people coming together and organizing economic activity, right? And this is why the whole thing is uncensorable. I mean, the design, the fundamental design of the creators took into account all of these conversations we're having today 12 years ago.
Okay, so just because it can't be censored, that doesn't mean it can't be punished. You might not be able to stop it, but you can hold, if they're identifiable, you can perhaps hold the authors or the operators accountable. And I distinguish between the author and the operator. I mean, Davinci, to your point, I mean, if someone publishes a contract on GitHub and then someone else publishes it to the blockchain, who's responsible? But I want to tease out, just because you can't stop the machine, that doesn't mean you can't stop the people engaging in the activity. So what do we do?
Billion people involved, right? I mean, are you going to go after a billion people? I mean,
yeah, exactly. Like, for example, when the Gutenberg press was invented, right? I'm pretty sure all the governments were against that, and they were against having, the public having books. And so that's why today we don't have any books. Oh wait, that's right, we do. They can't stop.
We call it Kindle.
They can't stop an invention whose time has come. It's unstoppable. They can only slow it down, and to their own detriment in the end, basically.
But what do we do? And I'll put us, here we are. We're not in 2030 where Bitcoin is just one and we're all using it and all this other good future I hope happens. We're in 2021 and we have to operate in the gray zone. And I think I'll throw this to UCLA, the competitor to my alma mater.
USC?
UCLA, I don't know, don't worry, we're gonna be friends.
Oh, Trojan.
Oh, damn. Okay, anyway. What do we, in terms of actionable, if we were trying to promote decentralized finance specifically, and do we play nice with institutions, do we play nice with governments, or we just go to the dark side and say, no, this is, but we don't have time to nurse your law?
It's interesting because if you think, I think that, and this was kind of our central thesis as a firm, right? Either crypto was going to be adopted by institutional players, or it would continue to be something really interesting that ourselves from California and the folks in the Silicon Valley would play around with and make money out of it, right? Not disqualifying that DeFi is not going to continue to be in the dark side, and there's not going to be innovations in the space. This ecosystem, and pat yourself on the back, expands faster than you can read. So you're never going to catch up to it, right? It's always going to be ahead of the innovator. But we're going to see an institutionalization of the space that's coming with a lot of money, right? Jamie Dimon was today on Bloomberg saying that he continues to think that Bitcoin is BS, but he thinks that most of his clients disagree with him. Therefore, JP Morgan is doing everything they can to provide the cleanest access to their clients to Bitcoin products. And I think that that's the evolution we're going to see. Do I agree with Jamie Dimon? No. But is that the reality we're seeing? I think so.
Jamie Dimon saying that is like, look honey, you got me so angry I hit the kids.
Yeah.
It's like, no, that's got to be the weakest cop-out I've ever heard.
It's all over Bloomberg today.
So, let me keep it on you for a second. I'm a securities law groupie, and I thought it was funny when you said that you don't want to teach securities fraud. Just a real holistic question, is the concept, all right, so as you know, and I think members of the audience know, in the United States, the evaluation of whether or not an undefined token is a security, you apply the Howey test.
Yes.
Okay, and there's 4 prongs to the Howey test. And, investment of money, the whole shit. One of the prongs is in a common enterprise. In a common enterprise, not in a market, not in a bunch of, disorganized, unpooled money, but in a common enterprise. Does the concept of a common enterprise apply when you have a DAO? Isn't a DAO decentralized by definition? So if you have a DAO or something decentralized, issuing something that has security-like characteristics, but there's no one in charge, there's no common enterprise, doesn't the concept of security go away? And aren't we in a new world where these traditional silos fail to describe what's going on? Then anyone?
Oh, it's a very interesting article on Der Spiegel, German magazine, which spoke about how the Germans rapidly industrialized in the 1920s. Very interesting article. So it gave a prelude to the Second World War, right? Why the Germans went to war with UK, and they said the British had a very strong copyright law, and the Germans did not have any copyright law. So all the Germans were basically copying each other's works and just creating very exciting innovations, and they industrialized massively, rapidly again. So what we see here is that some of these large countries, right, like the United States, I'm a huge fan of the US, some of the laws that were written were from the 1920s and 1930s, right? If you look at the Howey test and all that stuff, right? It came in 1933 or something like that, after the Wall Street crash in the 1920s. So, or maybe later in the century, but they're so archaic that they don't represent the reality we live in today. They're so disconnected from the reality. And the problem with that is that a lot of these American entrepreneurs have moved to Singapore, because I live in Singapore, and I keep seeing them all the time. And this is the beauty of the world we live in. US is one country, there are 194 countries in the world, right? And they all have Singapore has the Payment Services Act, which very clearly, describes what's a utility token, what's a security token, what's a protocol token. All of these things are very clearly there. And I think what needs to be done right now is that there has to be academic research at places like USC talking about these things, peer-reviewed articles.
UCLA,
UCLA, and USC, and MIT, and Harvard, and my friend Steve Rivera is from the the Harvard Berkman Center, and they do quite a bit of research in internet law. And I was involved in one of the first European Union research projects called P2P Value Review. I was the only non-European to be involved in. We've been talking about these things for about 7, 8, 9 years, and nobody's getting anywhere because it's very afraid, to see the transfer of power from the second pillar to the third pillar, from institutions to people. And this is very dangerous.
That's my concern / hope, that the institutions, that this can't be institutionalized. It's not just should they, it's not a normative question. I wonder if they even can. How do we institutionalize something that's decentralized? Does it make sense? So, Davinci, let me throw it to you.
I mean,
what do you
there
think?
always is an institution because of, some people, when you come together to build something, right, you build sort of an institution when people come together, right? So
I'm going to tee something up. I think you have an organization,
yeah.
but I don't know if you have an institution. That's sort of like a thing that exists over time with memory and its own mission that
That's
to me has
true.
an element of physical reality to it. An organization, just to me, this, it's not a law, it's just a thought. Organizations can be more ad hoc and flexible and kind of build from the ground up. Go on.
Yes, but an institution could decide to build a DeFi project, but unfortunately they live in the regulated space. And so they'll have teams of lawyers saying, well, you can't do that, you can't do that. This is why it's easier in this space. If you're in this space, you should just ignore any kind of government regulation and just build and not and not worry about it. Because you know what? You build first, right, and then worry about and then provide services for everybody, as long as you don't harm anybody. And then you worry about the regulations afterwards.
That is a bold
Bold
statement.
statement.
Did everyone get that?
No,
I'm not endorsing that as legal advice, but round of applause for that one. Just for having the, what to say it on stage.
You know who gets really happy with that? Lawyers like yourself.
Yeah,
I saw the excitement in your eyes.
You'll hire me after. But anyways, go on.
Go ahead. So I don't know if you actually thought about this question more deeply, right? Because what is the point of an institution? You're talking about institutions as entities that have existed for long periods of time, right? The reasons why they exist is because people trust in them. Like, Citibank has a brand name, right? Apple has a brand name. So we trust in the brand. But the whole point of blockchain is trustless disintermediation. The idea is that you don't have to trust anybody. You don't have to trust the Lehman Brothers for them to take outrageous amounts of leverage, or don't have any liquidity to basically cover the leverage when things go south, and go bankrupt and take the rest of the world with them, right? So the idea of the blockchain is to bring in openness, transparency, auditability, and all that stuff. So to answer your question, the whole point of everything that came up after 2009, when I was in the P2P Foundation, Satoshi published a white paper in Bitcoin Time there, was to basically remove institutions because institutions are outdated and archaic, right? And I think this is one of the things that the next generation understands better, and I think our generation doesn't fully get it because we still have that old paradigm of institutions, people with like suits and bow ties. We're all wearing suits here, but I think Alex is a young person in the team, but you don't have to trust people. That's the whole point of why we are here, right? The whole point of this conference, Blockchain Week, is to create something that's trustless, fully disintermediated. But no human being needs to be involved. It's open, it's transparent, it's a contract. You trust the contract. It's like, in God we trust, right? On the US dollar. It's like that.
All right, I'm going to turn into like philosophy, but I can't stop. I think that my take is the point on trust is valid. When I think institution, I think a bureaucracy, not in the negative sense of the word, but in the Max Weber sense, a bureaucracy that has both memory and mission, and it's beyond an individual. It's not inherently bad. A university can be an institution. It's memory and mission that's beyond a person that's put instituted through a bureaucracy. I think part of the challenge and part of the excitement of this current age is, do you need memory and mission in this form, when you can potentially make it all programmatic, you can have programmatic memory, you can have programmatic mission, and move that onto the blockchain. And again, it calls into question the whole idea of traditional human institutions. But you know, like John Dillinger said, you know, when he was asked why do you rob banks, he said that's because that's where the money is. So I mean, do we want institutions playing this field because that's where the money is? And I'll just throw it out there.
I think you're going to have institutions playing, right? And you already see that. Why are people here? Why are people excited? Because Visa is in the space, because PayPal is in the space, because we're solving the problem that a lot of the people that thought were crazy 5 years ago are now being able to hold the crypto assets with a much easier user interface than we had before, right? And Mark Cuban, I'm sure he has a staff of very well qualified people. He's complaining on the internet he's going to call. People want to call someone. People want to pass on that kind of custodian responsibility to someone else. It's just a philosophical question, kind of human nature, I would say. Most of the people here in the audience are fine with holding their keys and holding their coins, but I don't think that that's something you will see in the general audience around the world, and you will still need to call a 1-800 number.
But isn't it possible, I had this debate yesterday, that things, right now we have to think about using wallets, we have to think about using the blockchain, we have to think about moving between currencies to a certain extent. Can we reach the point where it's just so easy and so in the background, like electricity? I mean, we're rarely calling the power company unless the power's off. Do we need really that 800 number anymore?
Well, what do you do when the power is off?
You go have a drink. I don't know. Oh, Davinci, go ahead.
Light up a candle.
Well, I think institutions, I want to roll back to their question about institutions or whether we need them or not. And I really think that we do need them because they're actually going to help roll back some of the regulation. You're like, what? Well, institutions build up regulations so that it's a moat around them so that you can't get in. You can't like build an institution like they do, right? They don't want competition. So now they built a huge moat around themselves that they realize they can't cross in order to join the DeFi revolution. So for example, another example of that is just simple as Bitcoin. They added this regulation where, okay, if you want to borrow against your Bitcoin at the bank, you got to have the exact same amount of cash as you're trying to borrow against your Bitcoin. So now they won't have a bunch of Bitcoin on their balance sheet, and they want to borrow against that, and they can't. So they want to remove that regulation that they actually put in place. So this is the kind of thing that we're going to see over time, is that the institutions are going to be like, well, we want to make that money over there, so we've got to like remove these regulations that prevent us from doing so. And since they have all the lawyers and most of the politicians in their pocket, they'll be able to easily remove those regulations.
That's a fascinating comment. You're saying more than just institutions will get involved. You're saying that institutions will maybe inadvertently evolve themselves so as to get involved. Exactly. And in the process, maybe loosen up the system.
Exactly.
That's hopeful.
Hopefully
right.
I see it because they do want to play in this space, and they've created a system where they can't.
Right, so let me take a kind of return to an earlier question, which is, do the traditional categories of regulation, for example, the concept of a security, the concept of a commodity, the concept of a currency, do those sort of regulatory archetypes still apply when commerce is purely electronic and between AIs? Should we be, I mean, are we even asking the right questions here?
You're right. There would be these questions that's a good question, right? Does the current securities model apply against us? And you know what? There's going to be a lawyer that comes out and says, no, it doesn't, because here's why. And he'll come up with some fancy term to get around it and then allow us to, basically run our company, provide shares on the blockchain eventually. That's all it is. It's just going to be somebody that either removes the law, the securities law, or just comes up with a fancy workaround.
So at UCLA, are you trying to implement the law as it is to this new environment? Are you trying to evolve the law? Or are you, What's your
we do
gestalt?
Yeah, we do have faculty members that are a lot more qualified than the law school to talk about that. I think that our focus, both as a university and as a firm personally, on our personal investments is we understand that the laws are there. We think that the laws provide guardrails and a framework for this environment to grow and have more adoption. More adoption will mean more money. The previous speaker here was talking about 2024 being 1 billion people in Bitcoin. If you push that calculation forward to 2030, it will be 4 billion, right? And 4 billion people need a framework and a regulatory compliant ecosystem in order to feel safe, so that you don't have like the issues we've seen over the time. So I think that as a university, we look at it and seeing like, what is the regulatory framework and how can this industry evolve within it? Give case in point your securities lawyer, the Jobs Act, right? And how it took the SEC from when we started talking about security tokens in 2018, a year and a half to come and say, yeah, there is this framework over here, you guys can use it.
Yeah, it's terrible. Well, yeah, it's a challenge in the United States. So let me take the UCLA is a well-known, well-established, been around for maybe over 100 years, I think, right? Institution. Would UCLA, a public institution with, I think, a side endowment, would you invest in DeFi? Not you personally, but with the institution, or what's?
I think that the endowment of UCLA is already looking into crypto-related products, but as I can't speak for them, but my opinion is that they will only go for institutional products.
So would UCLA ever be a liquidity provider?
I don't think UCLA will be a liquidity provider, but I think UCLA endowment funds will put money on the ETFs that are going to come out.
Okay, right. It's sort of intermediary bundled regulatory type products. But I gotta go there. You can kind of make those synthetically on the blockchain. I wonder if those sort of ported-over versions will maybe 5-10 years.
Well, you're asking me if like UCLA is going to open an account on FTX or it's going to continue to play on the CMA. I think more the latter.
If you got insider information, please share. Davinci, I feel like you have a comment.
No, I did. I didn't think that the UCLA would open up an account on Binance or FTX either.
Exactly.
Stranger things that happen.
It's true.
I think the time counter, how are we doing? Actually, questions from the audience. Please, and say your name and...
Yeah, my name is Raul. I'm in fact creating crypto videos to demystify the space for a business network in India pretty soon. My question is, institutions are kind of like the barbarians and the caves. We have about 90 billion odd in TVL, and for the space to grow to a trillion, you're going to need institutions. And I'm wondering if, institutions where you've got regulation in the form of, at its very core, KYC and AML, how are they going to circumvent that in the world of Uniswap and SushiSwap where there is no KYC AML? The second part of my question is, DeFi was supposed to be, a promise to the little guy who's not an accredited investor in the TradFi space. But you see a lot of these DeFi projects, dApps, NFTs, where if you are an investor or if you got into the pre-sale round, you're getting the same alpha that some of these guys in TradFi are getting. So the retail investors essentially left with the crumbs. So is DeFi eventually going to be, old wine in a new bottle?
That's really simple, right? They're going to create laws that say, well, we can't exactly, have KYC on DeFi products like Uniswap. So let's create a law that says if you create a contract that's like decentralized and a decentralized exchange, well, that doesn't require a KYC or AML. But if you're a centralized exchange, it does. That's it. You'd be like, duh.
I'm gonna throw something out there that I'm not sure is really talked about, but maybe it should be. If you publish something on GitHub a contract. Who says that's not legally protected speech under the First Amendment of the United States? Okay, that's text, that's a creative work. And maybe publishing a smart contract on the blockchain is free expression of speech. So I think there's actually a constitutional argument against blocking that. And, you know, I think code is law, code is speech. And so if you're KYC, if you're blocking people's access to speech, aren't you controlling the form of their expression? So I think that's a route we can go down pretty soon.
I mean, I was on NewsX, India's largest English news channel, a couple of weeks ago, speaking about some of these things. And you know, we spoke at the very first event in 2014, talking about decentralized, you know, money and all that stuff. You know, I mean, you know, the thing is, you know, all these contracts don't belong to any country, right? I mean, you're talking about transnational, global sort of a thing, and none of these countries can come and agree on laws, right? I mean, Singapore perceives tokens differently. The United States has Howey test. Gibraltar has something else. I'm writing a law for Bhutan right now, part of the Royal Monetary Authority's advisory council, writing the law. And everybody perceives this differently because, you know, but at the end of the day, if you put a security on the blockchain, it's still a security. You're just tokenizing it, right? So like, let's say you're financing a bond or something else and you're putting it on a DeFi contract and all that stuff, it should comply to the laws of the country of where the bond is particularly, where the company, underlying company is traded. So that's my answer to you.
You got 20 seconds to respond. Alex, anything?
Well, I'll use the 20 seconds to thank everyone and thank Next Change, right? My opinion is, hey, listen, if you lose your money, would you like for it to have a regulatory framework that would put that bad actor that defrauded you in jail, yes or no? And then you will make your opinion if you think that this space should be regulated or not.
On that note, let's do a round of applause for our panelists here. Thank you for your attention, really appreciate it. Thank you, Olga, for running the best show.